Hey guys, hi. So it's the Market Sniper here, and checking in with you on Bitcoin and cryptos, highlighting the value of HVF method as you see it unfurl. Number of alerts now being triggered, literally live as I am watching. This is a significant sell-off and they're all going to start tweeting now. This is a significant selling off in Bitcoin, and there's a number of reasons why. You had this flat-bottomed HVF structure over here, for which we had a low slung funnel, which was the 47.5 neckline. We took the conservative HVF draw there because it was going to lead to a marginally higher high overall on the bigger time frames, which turned out to be this high in and around the 52.9s. The target generated from this came up to 51,750 to 52,000 handle. So in terms of our premium community, we advised our premium community that all leverage trades and leverage tokens should be closed and cleared out on the running of the 51,750 to $52,000 handle, and that you would likely have a significant slap in the face. This is not end of bull market. Everybody loves to misconstrue everything that I say. You're continuing to work yourself higher at the moment. However, you've just had a structure that gives you a localized high point, which was the 52k handle that was generated from the 47.5. You were sitting in your Wellington boots in a couple of inch of water there with this pattern structure that we have over here. These two big impulses here and the break from the 47.5 that occurred on that high momentum break there. We gave guidance that you'll probably stall in and around the 50k mark. That's what happened over here on Bitcoin, with eventually basing out, and that you would make the 51,790 to $52,000 handle, and then because we were still low vol, that you'd probably get a final little mini surge, after which all your alt trades that had failed to perform to other HVF targets, because you should have been in HVFs only, should be closed, and all leverage tokens should be taken off, and that you might have the first of a pushback that could have some momentum, some unpleasantness behind it. And that's exactly what you're seeing here with the sell-off on Bitcoin. Is this the end and all the doom mayors? The bear trap is now sprung, we're going to 10k? Absolutely not. Everybody who's been talking about bear traps has been talking about bear traps since 29k going to 10k, and is now facing a number of 52k. The whole notion of a bear trap is a short move up before a much bigger sell-off. This is not a short move up in any way. The accumulate and the macro bull is very much in play. But what you can sometimes get is you continue to set up new continuation patterns that pull back, much as you were over here when you first ran the 50k. You ran the 50k to 50.5, and you came all the way back down to in and around 46.5. So you had a 4,000 consistent, largely bleeding out to the downside, and then you still didn't go up, you wound up. You needed that energy and that time to wind up for a degree to get the next couple of thousand under your belt. In a similar way, you're going to have a pause, you're going to go sideways and slightly down, and time needs to be expended. That means if you're using leverage, you're holding on to leverage, you're holding on to cost, and your trade is probably going down. That's what made this area here a relative closeout point. Plus, we warned you'll get a little final surge that could eventually be stomped in, because we were still quite low volatility as we made this target, and we got the hammering there with a light drift up. There was a you never get out at the exact top on an HVF target. No better is this illustrated generally than in, let's just take a look, one of our trades that we drew and traded of many VET. So let's take a look at the VET chart and draw. Also lovely HVF structure that as a community we were in. We even gave this one free view. We gave a target over there at the 15.4625. You could have been getting in earlies in and around the 11s, 12s, and 12.8s. Then you came up. We actually got a little wind-up structure that presented a little booster. In actual fact, I'm slightly inaccurate. That one got invalidated. But that booster was still interesting with the final target. You wanted to close this trade on the final target. You wanted to close it. You got a little pullback and you pushed a tiny bit further, and then you have a significant sell-off. So the alts are higher beta. You can see this spill is more significant than the spill in percentage terms than the spill on Bitcoin. This is the value of being in the alts at the right time and knowing when the music stops and hitting the road before the police arrive. So you have the party, you have the fun, you have a couple of drinks, you flirt your pants off, and then you get out before things turn south, and you leave the other guys to go to jail for you, to wake up with a hangover and a lawyer's fee and a bail settlement and everything else. And that's the narrative that should prevail if you are utilizing any form of leverage tokens or leverage in trading. So this percentage here, many stops would have been run if you didn't have a takeoff point. The lack of targets in leverage trading is the death of the leverage trader. Greed keeps you in the trade, only pain takes you out. Therefore, your default exit strategy is pain or the very suboptimal trailing stop that always gets you out on a major sell-off, which sees you being squeezed out the cinema door with the rest of the pack getting terrible fulfillment, and also getting out on a relative low during the up move, which flattens your line of efficiency immensely. The line of efficiency being the entry of the trade. So those that jumped in, let's say you were long at the axis with us, 12.2 would have got out near the top on a relative high here at 15.4. Those with trailing stops got exited anywhere in a number of places here and held longer than us for a much worse return. And they wouldn't have got in at the early entries. Let's give them the just in time. They would have got a much flatter line of efficiency. Line of efficiency, the gradient that you attain from entry to target. The steeper the line, the less time value of charge on you, and you are paying with any leverage trading, guarantee you, and the higher the juice you get in that time. The gradient is steep. That's the nature of HVF trading. We've just done one alt as a demonstration. It's applied across the board. Bitcoin is taking a rest. Is it the end now? Everybody always suffers from recency syndrome. So if the last candle is a very aggressively down one, everyone is now epileptic. That's it. The bear's trap is strong. It's the end of the bull market. No, it isn't necessarily the end of the bull market at all. In fact, we're expecting it to run for quite a while. It's ironic that all the Bloomberg analysts came out on this daily hodl that I sometimes read the headline articles to get a feel for retail, as they came out and screamed $100,000 Bitcoin and $5,000 Ethereum, which makes no sense because that suggests that Ethereum goes up 20% from 4K, which is roughly where it was. But Bitcoin's going to double, which is roughly 52,000, is bizarre to me in the highest order. But as I say, I don't take these Bloomberg analyst says particularly seriously. We have a far better idea of price action and what's likely to happen right here on the Crypto Sniper. Far more advanced than you buying your Bloomberg screen and getting Bloomberg analysts blurting utter garbage at you at the point that the market is about to wet the bed. That our entire community had a full strategy for reducing leverage trades, for closing out leverage tokens at this level that I am indicating to you, plus a top-up update that said we'll have one little final flurry. If you haven't already got out, make sure you utilize it to get out of your higher beta tokens that would have saved you that vet sell-off, and if that's assuming you hadn't already closed on target. And as it goes for the likes of OMG, which we've already closed, a ton of other tokens that were already closed where target performances have taken place and occurred. So this is the value of HVF trading. You know what to do. Hit the link below, book a call, lock in the real gains on the way up to maximize your wealth as the control structure money of crypto is creeping in. And yes, it is control structure money, guys. The reason it survived is because it's serving them. Yes, they'll have controlled opposition. Bitcoin bad, it's the pedophiles' money, it's the gun runners and the avoidance money. No, it isn't. It's open source banking. But you have to be in the matrix to break the matrix. You have to build your wealth in these slavery days, this dystopian days. But I can certainly say to you, you're not going to do anything sexy now. There'll be mild recovery, there'll be churning. You could have a falling wedge here on Bitcoin. You could symmetricalize up and do another wind up. That will later give you a little bit more. The rate of ascent has been slowing. There's bigger rests in between. We could have in to come, although I don't think it's this one, a slightly more sustained and bigger time frame pullback. And again, we will be there reading the price behavior, reading the levels at which leverage trades should be closed, and telling you, as we told you, this alt run was coming 2 weeks before it was happening. During this gestating period, this entire gestating period of Bitcoin, we were asserting alt bulls because we were getting the setups across broad alt opportunities. And in this run up from this break here at the 47.5 to the 52k level, that gave you the direction God giving you the bull sign. But all the best trades were on the alts, and you had 100% runs, 140% runs, you had 30% runs, 40% runs. Even in the top 10 you had significant percentage gains for the likes of Solana. You had significant percentage gains on a ton of tokens that you either exploited or you didn't. And that's the value of HVF method. If you have no money, grab the free mini series link below. It's also not what you make, it's what you keep, by the way. We have real structures that can support people on that. You can email us on support@themarketsniper if you're serious about recognizing that it's not once you have made the money that you need some protection from the capital gains tax extractors and all of them. It's before. Then you can email us as well regarding those protections. Benefits obviously exist for our community members there, but we have amazing partners that we've utilized ourselves that can support you and help you with that. Okay, enjoy your crypto trading. Right now, nothing big to happen. Now you have to let Bitcoin rest. I suspect you'll have a mild rally. We'll wait and see what lines it draws in the sand for us before we start reading the tracks again, because this has led to an expansion in volatility. It's a pullback of downward movement after an increase. We wait for that volatility to dissipate, and we will read the tracks again once the dust has settled. That's the nature of the game. Thank you for watching. Hope you've enjoyed this. I'm been enjoying the fruits of the alt run, and yeah, I hope you like the view. Come and get a little bit of sunshine and sea wherever it's close to you, and enjoy the fruits of the crypto market. It is your best wealth growth strategy. By the way, on this point, what led to this, just before my long goodbye, I'm assuming, I haven't even checked the Twitter airways, somebody said something about taper or whatever. Gold rolled over as well after making that non-farm payroll HVF target. Yes. So a lot of anti-fiat assets rolled over. And this is the value with being with a community that is not just crypto alert and thinks that crypto exists in this perfect bubble that is sealed off from the rest of the real world, that recognizes that institutions are involved, institutions that are also involved in trading the dollar, trading gold, silver, and many other aspects. And that's what's good for anti-fiats is good for all anti-fiats, and when it turns a little bit bad for anti-fiats, it turns bad for all anti-fiats. Just the degree will vary. So go search your news, go find some Fed idiot that said they will still go back and do some tapering, or some banker report that thought they'd take some of the steam out of the crypto markets, the gold markets, etc., and try hide the inflation narrative that is clearly happening, but they will try and mask it as best they possible with news flow, with related banker smackdowns, so that they can make it seem true by virtue of saying, oh, this article and fear and all of that, and knowing that they will liquidate under-trained retail traders that are over leveraged, chasing the bull pump, and they will skim you off. They're going to take your Bitcoin off you if you do not know what you are doing. Okay, that's all from me. You know what to do. Click the link. Shares are appreciated. Thank you for watching, and we'll catch you later.